In the latest developments of the escalating trade war between the United States and China, both nations have introduced new measures that further intensify economic tensions. On April 9, 2025, President Donald Trump announced a substantial increase in tariffs on Chinese goods, raising the rate from 104% to 125%. This decision came despite widespread concerns about the potential negative impact on global markets and domestic industries. President Trump asserted that these measures are necessary to address long-standing trade imbalances and unfair practices by China. In retaliation, China imposed an 84% tariff on U.S. imports and implemented export controls on critical rare earth elements, which are essential for various high-tech industries, including defense and electronics. These export restrictions are expected to significantly impact U.S. manufacturers that rely on these materials. The entertainment industry has also been affected, with China announcing plans to reduce imports of American movies. The China Film Administration criticized the U.S. tariffs as abusive and suggested that they would negatively influence Chinese audiences' perceptions of American films. This move reflects a broader strategy by China to leverage cultural and economic tools in response to U.S. trade policies. Amid these escalating measures, President Trump unexpectedly announced a 90-day pause on most of the newly enacted tariffs for nearly all countries excluding China. This decision came after significant market volatility and bipartisan criticism. Despite this pause, the increased tariffs on Chinese goods remain in effect, underscoring the administration's focus on addressing trade issues with China specifically. Financial markets have responded with mixed reactions. While Asian and European stock markets experienced surges following the tariff pause, U.S. stock futures declined, and oil prices fell by 3%, reflecting ongoing concerns about a potential global economic slowdown. Analysts caution that the temporary nature of the tariff pause and the unpredictability of U.S. trade policy contribute to continued market uncertainty. As the situation continues to evolve, stakeholders across various sectors are closely monitoring the developments, anticipating further policy changes and their potential implications on global trade dynamics. In a significant escalation of trade tensions, the United States and China have imposed steep tariffs on each other's imports, raising concerns about a deepening global trade war. On April 9, 2025, President Donald Trump announced a 125% tariff on Chinese goods, a move that has prompted swift retaliation from Beijing. China responded by imposing an 84% tariff on U.S. imports and implementing additional measures, including restricting exports of rare earth elements vital for electronics and green technologies. Beijing also filed a complaint with the World Trade Organization and blacklisted several U.S. firms. These developments have led to significant volatility in global markets. Major indexes, such as the S&P 500 and the Dow, experienced sharp declines, with both plunging over 10% following the tariff announcements. In response to the market turmoil and pressure from business leaders, President Trump announced a 90-day pause and reduction to 10% on proposed reciprocal tariffs for most countries, though tariffs on Chinese goods were increased to 125%. The European Union has temporarily paused its countermeasures in light of the U.S. tariff reprieve, with ongoing discussions aimed at resolving trade disputes. Analysts warn that the escalating trade war could have far-reaching implications for global supply chains and economic stability. The increased tariffs are expected to impact various sectors, including technology, agriculture, and manufacturing, potentially leading to higher consumer prices and disrupted business operations. As the situation develops, stakeholders worldwide are closely monitoring negotiations and policy decisions that could influence the trajectory of international trade relations.